Strong consumer spending propels the U.S. second quarter GDP to 2.4%, way higher than estimates of 2% growth. Stocks, however, closed lower. The Dow runs out of steam after 13 straight sessions of gains, while the Nasdaq and S&P 2 end lower. Stocks in Europe closed sharply higher as the European Central Bank hikes by an expected 25 basis points. Commentary hints at a possible pause in September, even as it reiterates inflation is expected to stay too high for too long. Stocks in the Asia-Pacific trade largely lower ahead of the Bank of Japan's policy decision. The Gift Nifty also implies a negative start for the Indian market. And Brent crosses $84 a barrel. WTI crude hits $80 for the first time since April as U.S. GDP growth beats estimates. Prices, however, come off the highs in early trade this morning. In key earnings to track today, watch for numbers from Indian Oil, Marico, United Breweries and M&M Financial, among others. Hi guys, good morning and welcome to Power Breakfast. I'm Pavitra. Those are the top headlines that we're tracking this morning. There's a lot of global market action that is very important to look at today. Firstly, we of course did get that pretty weak handover from the US, the Dow giving up on, that 13-day rally. So we do have the Asian markets which are starting on the back foot. Also, remember, today is important from an Asia standpoint because the Bank of Japan will be in focus. And reports are suggesting that the bank will discuss allowing its long-term rates to rise above that 0.5% cap. So this is going to be very crucial for us to watch. And if it does come through, of course, it will be quite an important development. But ahead of that, you do have the Nikkei markets, which are down 1.2%. You have Hang Seng also, which is trading with cuts of almost 1%. The Taiwanese market's absolutely flat right now, so there has been a bit of a recovery there. But most Asian markets, whether I look at a Kospi, that's down 0.25%. You have the Shanghai markets down 0.4%. So definitely starting on the back foot for the Asian markets. The Gift Nifty will also come up for you. It is indicating that the start for our own market will be negative. Around 60 points in the red is where we're at. But let's also talk about the US then, because Wall Street ended yesterday's trading session lower. So we had the Dow, which shed around 237 points at the close. So it snapped that historic 13-day rally like we've been talking about. And the S&P 500 ended around 0.6% lower. The tech-heavy Nasdaq index also saw a similar cut, around 0.6% lower at the close. Now, U.S. stocks closed lower even as bond yields surged, so investors assess the strong U.S. GDP data that came through. And like we told you, the U.S. GDP grew at 2.4% in the second quarter, which is well above estimates of that 2% kind of growth. But on that note, let's also get you a closer look at that stronger than expected GDP print from the U.S. We have CNBC's Rick Santelli here with all of the numbers. Rick.
GDP better than expected. Second quarter first look 2.4%. That is the best start since the last quarter of last year when we were at 2.6%. Consumption, though, a big drop, but it was expected. 4.2 last quarter, 1.6 this quarter, but expecting 1.2. So it isn't bad when you compare it to expectations, but I do need to mention that it was a big drop. The pricing index, 2.2%. That's basically near half of our last look, which was 4.1%. And if we look at the core PCE quarter over quarter, 3.8% versus 4.9%. 3.8%. To find a lower number, you have to go back to the last quarter of 2020. Now, let's look at durable good orders, shall we? These are preliminary numbers. They will change. Much better than expected. 4.7%. 4.7%. Granted, it's June preliminary. That is multiples of the 1.3 we were looking for. And it is so hot. 4.5 was the last number read of December of last year. I didn't go back far enough. Who expected 4.7%? Ex-transportation, it's still multiples better than expected. Up 0.6%. We were expecting 1. In the rearview mirror, 0.7, but 0.6 is a good number based on expectations. And the 4.7 to 0.6 is a pretty wide spread. If we look at capital good orders, non-defense, ex-air, a proxy for Capital spending by businesses up 0.2, following a revised 0.7 that turns into 0.5. We're definitely losing a little bit of the horsepower that we gained here. We want to pay attention to that in particular. And if we switch gears to the shipment side of the equation, unchanged, that's definitely a bit of a disappointment, both in expectations, which were 0.2%, 1%. Rearview mirror was 0.3%.
All right, very, very strong set of numbers coming through there. That is the US Q2 GDP. And but with that, let's also talk about the other Q that we have been telling you about, which is the Fed Chair's commentary yesterday, saying that they are open to more hikes. They didn't really change the guidance, but said that they could hike, they could pause in the September meet. So let's listen into some important reactions that came through. This is from former Fed Vice Chair Roger Ferguson, as well as Wharton School's Jeremy Siegel.
Those economic factors, not the geopolitical ones, required the Fed to take action. And so I think it's a combination of both. And I think they're prepared to take the next move if the numbers come in, as some think they might, still higher than the Fed currently wants. They also are prepared, again, to hike, and we've seen them do it many times. So both things can be true. They want to manage expectations, and they want to be clear that another hike is certainly very much in the cards, either September or November.
This was the best news conference I heard from Jay Powell in over a year. I mean, he virtually came close to saying there's balance risks out there. Not quite, still a little bit more on inflation, but he really acknowledged that there were potential downside risks. He became very data dependent. He talked about, and which he should be. I know there's a couple of doves in voting members, maybe Austin Goolsbee, maybe Pat Harker, a few others that said, there is some downside. And he seems to now acknowledge it. It really was very, very encouraging.
Okay, some important opinion coming through on the Fed Chair's commentary. But let's also talk about the European markets now, because the ECB also hiked rates by 25 basis points, which is in line with what was expected. Now, the ECB has said that inflation does continue to ease, but reiterated that it is expected to stay too high for too long. In fact, the central bank also did not share any forward guidance. But let's listen in to what ECB President Christine Lagarde had to say as she addressed the post-policy press conference.
We will continue to follow a data-dependent approach to determining the appropriate level and duration of restriction. In particular, our interest rate decisions will continue to be based on our assessment of the inflation outlook in light of the incoming economic and financial data, the dynamics of underlying inflation, and the strength of monetary policy transmission. In any case, we stand ready to adjust all of our instruments within our mandate to ensure that inflation returns to our medium-term target and to preserve the smooth functioning of monetary policy transmission.
All right, that is all of the global developments that we are tracking this morning. There's clearly lots for us to digest. But with that, we do need to take a short break. On the other side, we're going to talk about how all of these overnight cues really impact us and everything that you should track from a domestic market standpoint as well. Stay tuned. Welcome back. You're still tuned into Power Breakfast. We were just going through the global setup, and there's lots for us to really talk about. And but let's now also talk about how all of these cues really impact our own markets. Everything that you should track before the market opens. So we have Ekta, Nigel, as well as Surbi all here with the trade setup. Guys, a very good morning to all of you. Ekta, let me come to you first. The handover has been a bit weak from the global markets, but what should we track this morning?
Thanks for that. Well, yes, yesterday was a rough ride on expiry day. We have a fresh series starting today. Yesterday, the sensex fell 440 points. The Nifty also corrected over 100 points. The Nifty bank fell nearly 1% and the mid-cap index managed to outperform. We saw a big sell figure which really came in from the FIIs yesterday. The DIIs, however, net bought around 2,500 odd crores. The global action earnings continue to dominate in terms of sentiment. So we had the US markets, which ended lower. They snapped that 13-day rally for the Dow. Strong Meta earnings, better Q2 GDP data. None of it enthused the markets by the close of it. European markets, ECB has hiked rates. Asia is largely weak. Bank of Japan is going to be in focus on account of the discussion of long-term rates. So that is something that the markets will watch quite closely. We've seen Brent crude as well as other commodity prices spike up simply because of the stronger than expected GDP data from the US. That is definitely a negative for the Indian markets and something we need to watch for. The Gift Nifty indicating a soft start at this point in time. Earnings continue to be in focus. Stock-specific action continues to be in focus. For example, Bank of India, IOC, DCB, Equitas, Small Finance Bank, Exide, M&M Finance, a whole host of numbers coming out, especially from the broader markets. So a lot to watch out for. Do watch out for Brent crude prices as well as the action from the Bank of Japan.
All right, got that. Those are all of the cues that we should watch this morning. But Surbi is also here with the entire list of individual stocks that you should keep on your radar and all of the important news flow that came through post-market close yesterday. Surbi.
Good morning. So first on my radar is BEL. Now the revenues were up 13%, EBITDA was up nearly 30%, margins came in at 19% versus 16.5% same time last year. Indian Hotels, a good set, revenues up 16%, EBITDA up 9%. Intellect Designs, revenues up nearly 4%, EBITDA up 8%, and margins came in at 23% versus 22% same time last year. Sona BLW, revenues up 25%, net profit up 48%. Indus Towers, revenues up 2.6%, EBITDA up nearly 31%, and margins come in at 75.5%. JK Lakshmi Cement, a weak set of results, revenues at 1,633 crores versus a poll of 1,660 crores, volumes at 2.9 versus 3, and margins at 10.28% versus a poll of 13%.
All right. Thanks for taking us through that entire list of stocks, Surbi. Finally, it's over to Nigel. Nigel, it's the start of a new series. Take us through what we should watch.
Well, morning, Pavitra. We got a troika of problems today because you have the US yield that's up close to around 4%. Brent crude prices are around $83.5 per barrel, which is a negative from an India perspective. And the dollar index at around 101.7. So troika of problems. But the Nifty, well, we are aiming at the fifth straight session to a fifth straight series to end in the green. Remember, the last few series has been quite good, and the chart should come up for you on the screen. We have been on a winning streak, last 4. So let's see whether or not we can make it 5 in the row. Now, in terms of the open interest, the Nifty open interest, well, it's 35% higher in comparison to the average of the last 3 series at the start of the series. That's telling you the rolls were higher. So let's see how this goes. It's a far heavier Nifty open interest that we're looking at. The FIs in the index futures, well, they continue to remain net long with close to 59% of their positions on the long side. However, they're not as long as what we saw at the start of the previous series. And even in terms of net long positioning, well, it's at around 33,000 contracts. Remember, just a couple of weeks ago, we were at 1 lakh contracts. So that's come down substantially, telling you the FIs have some more shots in the system, which, as I always say, is not such a bad thing. The Nifty options data, well, we have the highest open interest at around the 19,800 put and the 19,800 call. And both those two open interests should come up for you. The PCR at both these two strikes, well, if you look at the PCR, it's at around 0.55. Telling you the call writers is far more than the kind of put writing that we're seeing at that strike. Which brings us to the levels then. On the downside, you're looking at support at around that 19,555. That's a 20 DMA. While yesterday's low is another reference point at around 19,604. On the upside, since the 19,800 call has a fair bit of open interest, 19,900 becomes a bit of a resistance zone. The Gift Nifty, well, that suggests a start in the green. Let's see how this goes. Yesterday, we had a bit of a downtick in the final hour of trade because of expiry-related factors. This morning as well, we open up with a cut-off close around 60 points. The 19,600 mark needs to hold. The bulls will be happy going into the weekend. Back to you.
All right, Nigel, thanks for getting us all of those cues. So let's see if the bulls are happy going into the weekend or not. But for now, we do need to get into a short break. On the other side, we're going to shift focus to the world of commodities. There's been a lot of action there as well, with crude rising above $84. So stay tuned for that. Welcome back. You're still tuning into Power Breakfast, and let's now talk about the commodity space because there have been a lot of headlines that have come through from there as well. Manisha is here with all of the action. Hi, Manisha.
Hi, morning, and thank you so much for that, Pavitra. Well, we are headed with a 5% weekly gain when it comes to the crude oil prices, and this is going to be a fifth straight week that the crude prices are trading with a positive bias here. Well, the strong U.S. GDP numbers at 2.4% clearly have been supportive, and the markets do believe that going forward in the weeks to come, you could be looking at China as well coming out with a stimulus, and that has been supporting the markets also. So has been the fact that the supplies from OPEC and allies will continue to decline in this quarter, and many banks and brokerages are now putting out more positive and higher forecasts for the crude oil prices. The gold and silver, in the meanwhile, have seen a very sharp knockdown. This is the biggest one-day decline in a month that we've seen for for gold and silver, both of these commodities. The US and the Europe have increased their interest rates by 25 basis points. That was factored in. But both of these countries also have come out with slightly hawkish statements, and that's weighing on. And to add to that, there has been a rebound in the US dollar index at above 101. The markets also are looking at the demand on the floor continuing to decline as well. At these higher prices in China and India, we've seen demand suffer a bit, and that seems to be weighing onto the markets as well.
All right, Manisha, clearly a lot going on in the world of commodities. Thanks for taking us through all of that action. But another important story we are looking at this morning is that electric vehicle giant Tesla is looking to set up a battery manufacturing plant in India. Sources have told CNBC TV18 that some departments of the government are keen on reviewing the battery PLI scheme in order to attract global players, including Tesla. Parikshit joins us now. Parikshit, what are you picking up on this?
Well, there are active discussions on between Tesla and the Indian government for setting up a battery manufacturing plant here in India. Sources tell us that Tesla is working on future battery technologies and is considering an alternative to China. And this is because of the larger push of the US government for friendshoring. So India is one of the friendly destinations that Tesla is considering for selling cars, for manufacturing, and especially setting up a new battery line as well. They've asked for a slew of incentives, including duty concessions. The finance ministry has already ruled out any kind of special treatment for Tesla. But what we are given to believe by our sources that some quarters of the government really want the ACC PLI scheme, the Advanced Chemistry Cell, or the Battery PLI scheme, as it is simply called, to be modified to attract some bigger global players like Tesla. This will be a shot in the arm for the Indian government if it manages to get Tesla here. But these discussions are still at very exploratory stages. There have been discussions at the level of the Ministry of Heavy Industries, which spearheads the automotive and the ACC PLI scheme. There are discussions on with the Commerce Ministry, which deals with customs-related issues, PLI as well, and then the Prime Minister's office, which will give the final nod. But these discussions are at very early stages. Nothing is finalized as yet as far as Tesla's plans go.
All right, Pariksha, thanks for getting us all of the details on this important story. With that, let's also move on and bring you the latest on the weather situation. At least 10 people have lost their lives in various rain-related incidents across Telangana over the last 10 days. And the Met Department has also sounded a yellow alert and predicted heavy to very heavy rainfall in the state. In Maharashtra, meanwhile, we have 13 NDRF teams which are on standby amid incessant rains. And in Mumbai, too, the IMD has issued a yellow alert and expects intense showers in the city to continue today itself. So that is a check on where things stand as far as the weather goes. Here's hoping that everybody that can stay indoors does that and remains safe. But with that, we're going to wind down on Power Breakfast with the news that Asian markets are sharply lower. The Nikkei markets down 450 points ahead of that important Bank of Japan policy decision. We're going to wind down, but thank you for tuning in. We have Bazaar Morning Call up in 2.